I will be covering the African continent and the Middle East region. So it's going to be really high level. So on the agenda, I'm going to sort of set the tone for what's the regional landscape of transfer pricing in Africa and the Middle East. Briefly look at key characteristics of the region and how that impact transfer pricing. The COVID-19 impact on these regions. Look briefly at some of the key transfer pricing issues post-COVID-19 across Africa and the Middle East, and discuss some of the best practices which are relevant to these two regions to counter the increasing controversy from transfer pricing. So across the Middle East and Africa, so in the Middle East, there are 3 countries which have issued transfer pricing regulations and documentation requirements. They are Saudi Arabia, Qatar, and Jordan. Jordan actually about 2 weeks ago issued their regulations. Saudi Arabia from 2018 and Qatar from last year. So quite new implementation. In Oman, UAE, and Bahrain, there are only country by country reporting. So in Africa, there are about 22 countries out of the 54 countries in Africa which have implemented transfer pricing regulations. South Africa, Nigeria, and Egypt saw the first implementation about nearly 10 years ago, and it's really in the past 5 years that there have been more countries in Africa which have joined that route. Zambia has been quite progressive in the implementation, and there have been some cases, there's some challenges by the tax authority which have been successful. Two of those cases which are quite famous in the African world are the Nestle Zambia and the Mupani mines. So no doubt with the increased capability and introduction of regulations across the region, we are going to hear more legal cases from Africa and the Middle East. So the key characteristics across the region, though they are very sort of diverse, Middle East and Africa, diverse economies, industries, but there are some common key features which impact transfer pricing. So first one is that transfer pricing is quite new, and in some countries less than a year old. So it's quite a challenging environment for both taxpayers and the tax authorities. And there's still some potential for refinement. For instance, many countries have not yet implemented the ACA, or there isn't, APA, or there is no guidance yet on intangibles in certain countries or cost contribution arrangements. So we expect further developments in these countries. Saying that, there has certainly been an increase in capabilities over the years. As Inspectors Without Borders, which is a joint initiative between the OECD and the United Nations to train up tax auditors in countries where transfer pricing is new. So that's been the case in the Middle East and in Africa. So we expect to see an increase in capabilities in these regions. One common thing which really impact transfer pricing across Middle East and Africa is the lack of local data for comparability analysis. All the countries in their regulations have the requirement to use local data. So it's very important for taxpayers to understand that they cannot automatically go and use other data. There is the use of European or worldwide data where local data is not available. So of course, then there will have to be adjustments for these to reflect local market conditions. And that brings in sort of more subjectivity to the comparability analysis. Also, what we are seeing, which will impact transfer pricing, is increasing importance of technology across the region. There is an increase in digitalization of the revenue authorities, both across Africa and the Middle East. Probably more rapid in the Middle East. They have more means, probably sort of smaller countries. Qatar has launched their online platform last year, which is called Dariba, which sort of impacted the way that interaction with taxpayers are undertaken. All taxpayers can file their returns and can submit their payments online. Saudi Arabia has been using online platform for many years, and they are going through the introduction of e-invoicing currently. So that's another progress on the technology front. African countries too are trying to improve in that front. Transfer pricing was specific. There is the use of data analytics in their risk assessment, and there is the use of databases to conduct their own comparability analysis, whereas previously the use of their own database was very limited. So the type of industries that we find, which is quite common across the two regions by sort of nature or the economies, are the service industry, the contract manufacturing, and the distribution. So they have their own transfer pricing issues. In Africa, of course, there is the extractive industry with its own specific transfer pricing practices. So moving on to the next slide. So the impact of COVID-19 on both of the regions. As in most other countries, there have been a range of relief measures which have been granted to businesses. So now there is the urgent need for government to raise revenue. So tax administrators have an increasingly important role to play in raising that revenue as they are agents of revenue mobilization. And there is the recognition that, especially across Africa, the recognition of the importance of collaborative communication and engagement with taxpayers. African tax administrators have sort of a reputation across multinationals of not being as collaborative as what would normally find in more developed countries. And they have recognized this, and with the sort of training, it is something that they are improving on. And of course, with the increased use of the digital platform, this will help with interaction with taxpayers and improve on the effectiveness of tax collection as well. So in this slide, we're going to look at the key transfer pricing issues post-COVID-19 across Africa and the Middle East. But it is important to note that most countries are still going through their journey of COVID-19 at a different level of progress. Some countries are right in the middle of a second wave, of a third wave. Some countries have are seeing the numbers really low. So there is a sort of some trend that we are seeing, and which have started pre-COVID-19. One of the trend is towards centralization of support functions, towards countries like the United Arab Emirates, Philippines, Poland and Bulgaria. Many African countries are net recipients of intra-group services. And so there is a significant flow of payment for head office charges, for shared services cost, management services, to name a few. So as well as the usual challenges of having to prove that a service has actually been provided and it has been a benefit to the recipient, a benefit that a third party would have been willing to pay. There is the additional challenge of going through the transition period where there is some retention of functions at central level. So it's really important to prove that there is no overlap of functions or duplication of functions. So taxpayers really have to carefully define the functions which are being undertaken by the team at the local team and the team sort of based overseas. The second area is regarding intellectual property. So there is increasing scrutiny over intellectual property developed in Africa. There have been a few cases, a few challenges brought by the tax authorities in Africa in the past, but they have not been successful. These cases where there have been research and development which have taken place in some countries in Africa, there have been local marketing in Africa and hence the creation of marketing intangibles. And these challenges have not been successful in most cases for the main reason that there have not been transfer pricing regulations. So now with the implementation of transfer pricing regulations across Africa, so this item will be more in focus. So taxpayers will have to pay attention to this area. Last one but not least is financial support from parent entities. As multinationals are moving towards the end of the pandemic, there will be still some element of financial support from parent entities, probably in terms of the form of guarantees. So where in cases where the borrowing capacity is being extended, there is the risk of recharacterization of this financial support. So, so across Africa, taxpayers have to pay due attention to this area. So in this, in my last slide, sort of looking at some of the best practices to counter the increasing controversy in transfer pricing from African and Middle East perspective. First of all, we cannot stress enough on the importance of documentation. Now, when it comes to documentation, whether it's the Middle East or Africa, there is the tendency for multinational to treat it as a tick the box exercise rather than being proactive at identifying the risk areas. So the transfer pricing policies and intercompany agreements are sometimes overlooked by multinationals with regards to their operations in Africa or the Middle East. And when these documentations are maintained, sometimes they lack consistency with what happens in reality. So that disconnect can be quite quickly picked up by tax auditor if the client is undergoing a tax audit. When it comes to intercompany agreements, that of course is a legal document, and it needs to be written as such with a standard of a legal document. And again, it is something which is very much overlooked in these in countries in these regions. The other thing is local requirements. There is an increasing trend of the large multinationals having their own centralized transfer pricing departments, which produce all of the local files for all the countries that they operate in. And that can be quite cost effective, but it's really important to understand that even though most of the countries follow the OECD guidelines, there are some local requirements, and it is really important to show that they are met when the local files and the policies and the intercompany agreements are drafted. Now, having done all of these policies, it's really important to have a self-assessment, sort of step back from these documents and try to step into the shoes of a tax auditor. So really proactively identify area of potential risk and address these. Sort of, for instance, if there is a need for additional profit level indicator to support the selected transfer pricing method, or reviewing the industry and company description and ensuring that it is focused and relevant rather than quite generic, which we tend to see in this part of the world, because that's the basis for the sort of selection of the transfer pricing method. And especially in this current environment, it is the opportunity for the taxpayer to really relate what's been sort of happening in the company and in the industry. The next item is consistency between transfer pricing disclosure form and other documents. Across many countries in Africa and all the countries which have implemented transfer pricing in the Middle East, there is a requirement to file a transfer pricing disclosure form with the tax return. And this is the first view that tax authorities will have of related parties agreements. So it's really important to ensure that this is that the filing is showing the correct information and it is consistent with the audited financial statements, the tax return, and the local file which will follow. Also, what we are seeing, especially in the Middle East, is an increasing interaction between customs and corporate tax department. In fact, last month, the tax authority in Saudi Arabia announced the merger of their custom department with the corporate tax department. So we can expect more free exchange of information. So it's really important for taxpayer to monitor their pricing of imported goods, where there is adjustments at the year end. The last one and the most obvious one, no doubt, is to ensure that if there is an audit, that there is a timely response to the auditor queries, and all the interaction are being done in a collaborative manner. Now, with transfer pricing being very new in the region, that's not as easy as how we would see that being done in across Europe or Australia or in the US. So it is something that certainly there is potential for improvement in these two regions. So that's all from me. Thank you.
Thank you, Rubeena.